Yo, what's up? So, here has been something that I've been asked a few times how I am seeing order flow, and I am by no means an expert. I used to use this way back in the day when I traded old school supply and demand. As a lot of you guys know, I trade a hybrid of ICT, Dexter, Dave teaches FX. It's like kind of a culmination of all of those guys plus my old supply and demand. Um, so I wanted to break down in my best ability so I could answer a few questions for a couple different people, and if it helps anyone else, cool beans. Um, so let's get into it. Let's look at a smaller time frame, such as the 1 minute. That's mostly what I trade on. So order flow from Z top down, kind of looking at like, okay, so realistically, this is your low that created these highs. And if you want to get really, really, really specific, technically, this and this is your low. So here is a major low. Beep boop bop. That's like the most important one because if I'm not mistaken, this would be your most important high time frame low. But we'll get into that a little bit later. But um, really, if you're looking at the 1 minute, the low that puts in a new high is the protected low. So this is your first sign that the change of order flow is happening. And what you could be looking at is you could be like, hey, okay, so you have this swing right here. You could be like, hey, it's just coming down here. It's mitigating this swing. And there's also this swing that is the last downswing from here to there. So either one, you could be using either one. They're basically the same. So I can just keep it right there. So you could be saying, no, we're still going long. We're just clearing internal liquidity before we go up. But you have that context, but then what is the context here? And I think that a lot of people get really wrapped up, and including myself and every other person I know, is you get wrapped up in your narrative. You have your narrative and you're like, oh, okay, so this is a high time frame bullish array. Maybe there's a fair value gap here. Maybe there's even an inversion gap here or a BPR or whatever the fuck. There's probably something in there if we went into a 5 minute, almost guarantee you. And you could be like, oh no, it's gonna go higher. Well, here is your first internal shift. This is saying, hey, there's a change in order flow. Well, how can you invalidate that? You can invalidate that by breaking this high. So that would be saying, nope, order flow is actually up. But what happens instead? Instead, what happens is you're unable to create a new high and you have a swing failure. And that swing failure happened to have happened on the last upswing. So right there. This was, if you want to zoom in and get really nitty gritty, this wick, price moved from down, stopped, went up, and then the next candle started the sell off. So this little candle singular candle was the last fractal up. What happened when we retested it? Failure. So when a swing high or a low fails, you can generally target the other side of which it came from. So here you would be targeting either 50%, super easy target, you target the low, or you actually target the actual low, which it provided. And when you closed a body like it did here under this low, that just validated this high. So now you have another low and high. What happens here? It can't even make it up to this area. And this is getting, this would be beneficial to look at even at a lower time frame, such as like a 15-minute second or like even a 5 second or something, but you don't really need to. Here is the last localized low right here before it made this high. What do you have before it's able to break through? Well, you have this push up. So it went, let's see here, let's track this, down, and then it pushed up. So really, you could use this whole candle right here. Okay, so it hits that, rejects. You could use a million things right here. You don't have to use this. You could be looking at just OTE. You could be looking at that there is a inversion gap right here if you're dodgy. You could be using these VIBs if you're cash. There's a lot of different things going on here. But for simplicity's sake, let's just say we take a box and we have this. Let's see. Grab this top and grab this. Yeah, so that's an OT entry basically right there. And then you have like the additional shit behind it. You have this inversion and the bits that we were talking about. So yet another failure to break a high. Then you cannot break the previous low. So you're thinking, oh, okay, we're going to get a test back in there. Well, what happens? This low to this high, you get another OT entry that lines up with a VIB. So you got a VIB, you got a fair value gap, you got an OT, and then each time this is happening, you can basically, if you understand these fractals, you can be risking the top of the fractal. If you don't understand the fractals, you could be risking the top or the high, which is still relatively small. And then once you start getting down here, you could start risking this. So right there, you get in. So all those are under 5 points. And your general target is the low that just got created, or you can target the actual low that created these highs, which is more generally like a pretty good target in my opinion. So, you got that going on there. And any of these would have provided, at minimum, even if you got a shitty entry like here, that's 15 points. More likely, you're probably going to target this major low, that's 20 points. But then you start adding things such as standard deviations, skibbity doo dah. You're thinking, okay, 2 is the minimum. And then there's a potential for 4, and then if you're looking at even a higher time frame, this would be your swing right there. And that smacked that. And then if you're looking at a 15-minute, it would be this, which actually, no, it's not even that. Let's see. Let's just go into 15-minute. Okay, so 15-minute. Yeah, you are looking at that. And then a 1 hour would be this fractal. Yeah, which 2.5 back into the range and then dump, and then most likely you will see this clear out next week, or it will come and it will test into this last fractal right here before it makes its way back up. But back into the 1 minute we go. You are looking at, as soon as this breaks, then you actually have real high time frame structural shift. And then once you have this level right here, you really have high time frame structure. So let's go into a 15-minute, see what's up with it again. Yeah, so 15-minute, this is the structural break. And then this is another one right here. So the fact that if you're looking for a market structure shift, which a market structure shift is just a change in basically order flow. So you can think of it like that, or whatever gets your gears grinding. But once you see that happen, on the higher time frame, then you can realize like shorts are definitely on at this point. Like up here, you could have traded this 100%. It was very clear what was happening, like we were going through. But then say you want to be a less risk adverse trader, you're not comfortable with that. Well, you wait for this. And this just so happened to set up right before open. So it's like you break structure, you even break this structure, because look at this. Body closure underneath these bodies. So it's not perfect, but I feel as if you went to a 1 minute, you would have actually broke structure. So let's put a on this low. I want to see what it's looking like. Oh, where do we go? Ah, yes. So this is the full on structural break, and we got it. 100% got it. So it was just a freaking perfect setup. Okay, so let's just get rid of this line. So here and here, these are your two shifts right here, market structure shifts. What happened before you actually broke it? Here was the break of the first structure. So what happened before that? So you have this candle up, down, through. Yeah, so you have this little IO Fed right here. That's ICT nutting his pants right there. Let's see here, so you get the structural break. Yeah, so you could use any of these zones. Any of these zones would be valid. Um, let's see what you get on. I'm curious to see what a 15-second looks like. Ooh, that's hot. 15-second projection is projecting this area. And look at this. This is a full zone. So we'll use this to this high. And then there's a VIB in there. It's pretty beautiful. So smack that zone, jump back into the minute time frame. Yeah, that's money right there. So you're looking at that. You know, order flow has changed to the downside. Um, it's unfortunate that it happens before 8:30, but you know, it is what it is. Some people don't like open. I don't have any problem entering before 8:30 or 9:30, or New York Open or whatever you want to call it. I I actually don't mind. I would prefer to be in before the open than get in at the open, because it can be nasty, obviously. But then your secondary setup happens right after it. It's like, okay, you just created a low, you failed to really create any new highs. So here was a tiny little shift, and you could possibly be thinking, like, okay, liquidity was cleared out. Maybe this is just a soup, and it's not going to um, go and continue further. It's actually going to reverse. So what you could be thinking is like, okay, maybe it's a long, and you're looking for your long setup. Well, you cleared this, then you tapped back in to the structure, which was like, meh, I wouldn't really take that, but it was kind of there. And then you failed to break this high. Bodies were, yeah, body closure really wasn't happening on this 1 minute over these wicks. Eh, like by a hair, by a hair. Not enough to entice me to go long, especially not after this fat ass drop, and shift of higher time frame order flow and structure. So back to this, we're looking, we get a dump right at open. It breaks this structure again. So now you have just validated this high as a protected high. Now you don't want to see it break this, or else that would be changing the order flow to the upside. Um, your sell, that's a sell leg right there. You have an OT entry again up here. Um, you have a breaker. I mean, actually, a better breaker would be this one. I mean, you could use a lot of different things. Order blocks, there's a fair value gap right here. Uh, this is a unicorn setup right here in a OTE of that swing leg. Um, and then this is a great Dave zone or Dave retest. The other thing is get rid of that shit. You have the this low before that low was taken. You have this, yeah, this, which it doesn't actually tap into. So, but it does create displacement as it's going through. So it's a pretty valid fair value gap right there. So there's a lot of different things you could use. And then you once again have another setup. It's not great that you're not taking the candle closure, but you're pulling back. Um, you have again this swing, you get a 50% tap that happens to be in another fair value gap, and you continue on down. Provides just from there, you know, almost 200 points. And then what we talked about, this and this are your highs, your protected highs. So this would be a protected high, but actually since this low got broken and then it went and took this liquidity and this liquidity, this would actually be your protected high, if I'm not mistaken. So if you cannot break this swing, then shorts are still on the table. So you mark from this low to this high across. Let's make it pink. So you got your sell-off box that until this high is broken, shorts are still where it's at. And then structurally, you just keep breaking down. Like where could possibly be where you're looking at? It's like, okay, you have this low. You could be looking for it to clear it out and go. You know, you have your higher time frame sell. You have this low. You could be looking for reversal, but you know, you're not just slapping it. You're looking for a confirmation, and we'll go into that very soon. We have this is the last downswing before the upswing happens, so we'll mark this shit, make it green. Okay, yeah, looks good, looks good. Swing it on over there. Would you look at that? Taps 50%. So you take the liquidity of this, and then you stab into unmitigated zone, unmitigated downswing. It's almost a double tap, but it didn't quite reach 50%. But it is kind of like a double or triple tap into this zone. So it's like if you go in here, we created this downswing, came up, order flow change, market structure shift, tappity, tappity, go. Came back in here, another tap. Okay, so you know you cleared out all this liquidity. Order flow has not changed on the higher time frame, but to me, this is where the order flow changes for a retracement. Because like I said, until this high and this high get broken, then you're not actually looking for a higher time frame order flow change. And so you're looking for retracement to short it until this gets broken, and then that gets invalidated. So I actually took this trade. I was at the gym. I actually got here and was kind of pissed off because, you know, 300 point sell. It's really cool. But I sat there and I was just like, all right, let's just chill. Let's see what happens. And then we popped in here. We get the order flow change. You realize that, okay, it was popping off of this array that we had previously tested. We cleared out a bunch of liquidity. Let's see what's going on. Okay, we have this last swing. Yup, cool. So mark that shit, which just so happens to be the 10 o'clock open. That's a perfect 4-hour candle manipulation, which I love. So it's like you got this was kind of the open. This was the open right here. It actually went down to here. Let's just move this over. We'll Okay, so that's your candle. And it dips down. You're getting a 4-hour manipulation. You did a market structure shift. Right here, you have your zone. This is like it created like a little micro shift right here. It's like candle up down, broke this, candles high. So you're having a micro shift before you actually make the macro shift. You have this low. This low was not able to be taken. You tap back into it. I actually entered this, sold right here, and then I got back in and this right here. And then I believe I added right here. Um, and I actually didn't take this all the way up. It was petering out, and I think I sold that. I believe 50% of this range. Yeah, I'm pretty sure I sold like somewhere. No, I sold it like 70%. I sold somewhere right here when it was just kind of lagging and I had to get out of here. But back to what we were talking about. So once you have this right here, you created a shift in my eyes after all this narrative that we just talked about. This candle now looks like this. Come on. Oh, magnet. You're killing me, magnet. Really killing me. Okay. So this candle is looking like this at the time. And you have your shift, you're realizing, okay, this might be the power of three, this might be your manipulation. You could get in right here, or if you say, this wasn't enough for me, I don't trust it, I feel like this is sloppy delivery, I don't want a part of that delivery, well, hey, you can wait. And it just gives you an even cleaner setup. And then you got this right here. Now you have this. And you're like, oh, okay, you know what? This is fucking looking like it's on. We just broke structure, came back down, could not break the low. The low stayed intact. So you have this. This is your swing. It just broke that swing. Came back in, respected about 50% of it, couldn't create any more lows, and then took this high. Well, now you just had a full order flow change. And then generally, the first tap into a zone is a scalp. Sometimes it'll just keep rocketing, but healthy order flow generally breaks structure, taps back into it. So here you have your um, your high, and it stops right here before it breaks, and it dips back in. So you have a little bloop bloop. And it actually this was just a pullback to right here. This was your actual dip before it broke into structure, but really you could use any of this. You could use this wick to this wick. You could use this wick to this wick, at least in my eyes, or you could even use this fair value gap right here. Or you could say this is your breaker. It's not a great breaker, but it still technically is a breaker as it broke through the zone. So this could be a breaker. Yeah, it's a shitty breaker. It broke by like 1 point, but I don't really care too much about that, what you're seeing is you're seeing structure break, come back, testing it, and then going. But here's what I was looking at. I was looking at this right here. So you have this with the confluence of a fair value gap, little tiny one, and you have a order block set up right here. Boom, you have a bunch of shit. This is also a flash or a God, what is it? It's a zoom model if you are into the TCM guys. But anyhow, back to order flow. Order flow breaks, structural change. You get back in here, high time frame, still bearish. What's your target? You got Dexter on your side. You know that this needs to get broken in order for the shift to happen. To add ICT onto it, here is your daily range. Your daily range is from the high to the low. Targeting, good target, is from your low to your high, 50%. So that's 50% of the range. And that also, that's where I actually sold. That was I knew that it could go higher, but it was lagging out right here, and I forgot it wasn't 50% of this range that I sold, it was 50% of the overall daily range. That's where I decided I was out, and I had to go to work, and I was like, fuck it, I'm out. But you see, we tap into it. We don't quite reach 2. We just like literally a cunt hair away from it. You see that this is your protected low because you just swept these highs. Okay. It sweeps internal liquidity, dips back into your last downswing. So this was your full-on structural shift. It dips back into what cleared out that high, 50% straight into it, comes back up, goes into 50% of this protected high or this last downswing, and then proceeds to sell off. So right here, El Dexterino again, straight money. So that's how I'm looking at it. That's how I saw the other day. But I mean, you can go back and like, let's look at a 15. Okay, so let's just go over here. So this was the last high. Okay. Then you break that high, and now this low is your protected low. This high gets taken. Now this is your protected low. This high takes that high. Now this is your protected low. Okay, so protected low on a higher time frame. I mean, you technically could use this, but I would rather use that, especially since there's consolidation. Okay, so what happens? You snap through it, okay, and then you break through this low, and then you test into this right here, Yup. But then, okay, so you have all that. You have this low that was taken. Okay, so this was our kind of like consolidation little, if you go into 1 minute, I guarantee there's a consolidation right there because there's an upswing in it. If you look, take this upswing, could not break it. And then if you look at a box, so it basically went up into like an OTE entry. Could not break this swing high, could not break this fair value gap. And then when you have this high that's created, and then it breaks down, you have a little order flow change or order flow continuation. This low sweeps all that shit. This closes underneath this low, and then you can't break this high. So let's get rid of all this garbage. And then let's just use this. So you have this swing high. Okay. You realized, okay, here's the low. Here's body closure under that low. Here's the swing high. And then if you want to get even really technical, you could go into literally the last swing, which would be right there. That's the last push up. It could not close above 50%. You come back in, you're just creating liquidity, engineered liquidity, as ICT would say. And then you are unable to structurally break any of that. Let's even just go into the candle bodies. Yeah, you are unable to structurally break anything, not even a wick. So what can you do? There's a 15-point stop, or you could even just use the top of this wick, which would provide a 4-point, or say you don't get in there, you could use the high right there, 8 points, or you could use about a 10-point stop, whatever. And then your next target is this low. So because the low that created this high is unable to break, it means that this low is going to get test or broken. Order flow, downskis. So right there. So you get in right here. So you use a 10-point stop because you were slipping and you got a shitty entry. And you're targeting not even the low, let's just say the last part of the low before actual lows. That's a 7R, 73 points for 10.5 points. Then you get the next break in structure. You get bodies closing under these bodies, which is the next big low. And you have all these ICT talk, you got all these sell side liquidities going on. Fat ass equal lows. But we'll just focus on this right here. Oh, you created more equal lows. Tasty. Okay, so you got all that shit going on. This is the morning open. Okay, so you just swept a liquidity. Here was your last upswing. Okay, so highest upswing is actually right here, but swing, we'll just use this. And then you're unable to break this high, which, you know, it's not really the greatest high, but if you went into 1 minute, you know, you'd be looking at a whole
other looking setup. Ooh, I don't know if 1 minute's going to go back that far. Yeah, we might be fucked. In queue. Nah, it's not going to happen. Let's go on 5. Ah, yes. There we are. Okay, so 5 minute swing. We'll just do that. Narrows it down. Got this. You're unable to break. This is the 9:30 open. Always kind of shitty when you have to open, like, get in right before it, but you have 10 minutes. You could be getting in right here and then setting your stop at this high of the box or above this wick, and then you're targeting sell side liquidities. Order flow confirmed down, unable to break this. Here would be your structure for retracement. You know, if you wanted a full flip, you would actually need to break this high. That would change the order flow to the upside. But until then, a retrace or reversal, you need this at bare minimum to break. Unable to break, straight sell off. That's say you're to get in right there or right here, you know, almost 200 points. Or if you held all day, almost 300 points. But that's my long-winded order flow structural blah blah blah. Hopefully that wasn't too long and convoluted. All right, bye.